Want to invest in real estate but dread being a landlord? Tired of fixing toilets and chasing rent checks? There's a better way. REITs, or real estate investment trusts, let you own a piece of the real estate pie without the hassles. Imagine owning shares of giant shopping malls, luxurious hotels, or sprawling apartment complexes, all without lifting a finger. That's the power of REITs. They offer a simple, accessible way to tap into the lucrative world of real estate. With REITs, you become a silent partner, reaping the rewards of real estate ownership without the headaches. It's like having your cake and eating it too. Real estate investing made easy. REITs are like mutual funds for real estate. They pool money from investors to buy, manage, and operate income-producing properties. These properties can be anything from office buildings and shopping centers to apartments and hotels. Think of it like this. You and your friends pool your money to buy a rental property. You share the profits from rent and everyone benefits. REITs work similarly, but on a much larger scale with professional management. When you invest in a REIT, you're buying shares of a company that owns and operates these properties. It's a simple way to add real estate exposure to your portfolio without the complexities of direct ownership. Just like there are different flavors of ice cream, REITs come in different types, each catering to different investment appetites. Equity REITs. These are the most common type. They own and operate income-producing properties like shopping centers, apartments, and office buildings. Their profits come mainly from rental income, mortgage REITs. Instead of owning properties, these REITs provide financing for real estate projects. They make money from the interest on these loans. Hybrid REITs. As the name suggests, these REITs combine elements of both equity and mortgage REITs. They offer a mix of rental income and interest income. Knowing the different types of REITs helps you choose the one that aligns best with your investment goals and risk tolerance. REITs offer a compelling blend of benefits that make them attractive to both seasoned investors and newcomers. Passive income REITs are designed to generate a steady stream of passive income through dividends. They're legally obligated to distribute at least 90% of their taxable income to shareholders, making them ideal for income-seeking investors. Liquidity. Unlike physical real estate, which can take months to sell, REIT shares can be easily bought and sold on stock exchanges, providing liquidity and flexibility. Diversification. REITs offer a convenient way to diversify your portfolio beyond traditional stocks and bonds. They provide exposure to a different asset class, reducing overall portfolio risk. These advantages make REITs a valuable addition to any well-rounded investment portfolio. Section 5. Global REIT Hotspots, where to plant your money seeds. The REIT market is global, with opportunities spanning different continents. From North America to Asia and Europe to Australia, investors can find a variety of REITs that suit their investment goals and risk tolerance. Each region offers unique advantages and challenges, making it essential to understand the local market conditions. Here are some of the most established and promising REIT markets. The USA. As the birthplace of REITs, the US boasts the largest and most developed REIT market globally, offering a wide array of REITs across various sectors. From commercial properties in bustling cities to specialized REITs focusing on healthcare or technology, the US market provides diverse investment opportunities. Singapore, known for its stable political environment and robust real estate sector, Singapore has emerged as a major REIT hub in Asia. The city-state's strategic location and business-friendly policies attract investors from around the world, making it a vibrant market for REIT investments. Australia. With a transparent regulatory framework and a strong culture of property ownership, Australia offers a compelling REIT market for investors. The country's economic stability and growing urban centers provide a solid foundation for real estate investments. European REIT markets are gaining momentum, with countries like the UK, France, and Germany offering attractive investment opportunities. The diverse economic landscape and regulatory environments across Europe mean that investors can find REITs that align with their specific investment strategies. Remember to research and understand the specific regulations and market dynamics of each country before investing. Each market has its own set of rules, tax implications, and economic factors that can impact the performance of REITs. Consulting with a financial advisor or conducting thorough research can help you make informed investment decisions. Section 6, REIT Investing 101, your step-by-step guide. Ready to embark on your REIT investment journey? Investing in real estate investment trusts, or REITs, can be a rewarding way to diversify your portfolio and generate income. Here's a simple guide to get you started. 1. Educate yourself. Understanding the fundamentals of REITs is crucial before you dive in. Learn the basics of REITs, the different types, and the risks involved. Knowledge is power. Familiarize yourself with terms like equity REITs, mortgage REITs, and hybrid REITs. 2. Determine your investment goals. Clearly defining what you want to achieve with your investments will guide your decisions. Are you seeking passive income, capital appreciation, or both? Your goals will influence the type of REITs you choose and how you manage them. Your goals will shape your REIT selection strategy. For instance, if you want steady income, you might focus on REITs with a history of high dividend payouts. 3. Choose your investment method. There are several ways to invest in REITs, each with its own set of advantages. You can invest in REITs through REIT ETFs, REIT mutual funds, which offer diversification and professional management, or by buying individual REIT stocks. Each method has its own risk and return profile, so choose the one that aligns with your investment strategy. 4. Research and select REITs. Not all REITs are created equal, so it's important to do your homework. Look for REITs with a solid track record, strong management teams, and a diversified portfolio of properties. These factors can help mitigate risks and enhance returns. And a diversified portfolio of properties. 5. Monitor your investments. Regularly reviewing your REIT investments is key to long-term success. Keep an eye on your REIT investments, track their performance, and stay informed about market trends and economic factors that could impact your investments, and make adjustments to your portfolio as needed. Remember, investing involves risks. It's important to stay flexible and adapt your strategy as circumstances change. It's essential to consult with a financial advisor. They can provide personalized advice and help you navigate the complexities of REIT investing. To determine the best REIT investment strategy for your individual circumstances. With the right approach, REITs can be a valuable addition to your investment portfolio. Section 7. Navigating the REIT landscape, risks and considerations. While REITs offer numerous advantages, it's crucial to be aware of the potential risks. Interest rate sensitivity. REITs are sensitive to interest rate changes. When interest rates rise, borrowing costs for REITs increase, potentially impacting their profitability and dividend payouts. Economic downturns. REIT performance is linked to the overall economy. During economic downturns, demand for commercial real estate may decline, affecting REIT revenues and potentially leading to dividend cuts. Understanding these risks and diversifying your REIT holdings can help mitigate potential downsides. Section 8. REITs and interest rates weathering the storm. Interest rate fluctuations are a fact of life in the financial world. They can create uncertainty and volatility, but they also present opportunities for savvy investors. Here's how to navigate the impact of interest rates on your REIT investments. Don't panic, stay informed, and keep a level head. Understanding the broader economic context can help you make better decisions. Short-term interest rate hikes don't necessarily spell doom for REITs. In fact, they can sometimes lead to opportunities for buying undervalued assets. REITs have historically performed well even in rising interest rate environments. Focus on long-term value. Look at the historical data to understand how REITs have weathered past storms. Instead of fixating on short-term fluctuations, focus on the long-term growth potential and dividend income of your REIT investments. Diversify your REIT holdings to spread risk and enhance stability. Invest in REITs across different property sectors and geographic locations to spread your risk and potentially offset the impact of interest rate changes in specific areas. This strategy can help you build a more resilient portfolio. Remember, a well-diversified REIT portfolio can weather interest rate storms and deliver solid returns over time. Stay patient, stay informed, and stay invested for the long haul. Section 9. The REIT Advantage, your path to passive income and beyond. REITs offer a powerful combination of passive income, liquidity, and diversification, making them a valuable tool for investors of all levels. By owning a piece of the real estate pie through REITs, You can potentially achieve your financial goals without the hassles of being a landlord. Remember to do your homework, choose your REIT investments wisely, and monitor their performance over time. With careful planning and a long-term perspective, REITs can help pave your path to financial freedom.